Apple stock, ticker symbol AAPL, the biggest company in the world in terms of market cap, around 2.7 trillion. This stock is down roughly 12% year to date, and Apple will present their quarterly results this Thursday. We know that Apple is the biggest company in the world and probably has the most cash in the world as well. Next to that, there are a lot of statistics about Airpods sales alone being bigger than some big companies in the US. But is Apple stock also a buy, and how about the fundamentals of this company? In this video I will show you everything you need to know about Apple. I will show you what they do, and I will show you my fundamental analysis to see if AAPL stock is a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analyses every week, where I will tell you everything you need to know about the stock market. So, what does Apple do? Apple designs, manufactures and markets smartphones, personal computers, tablets, wearable and accessories, and sells a variety of related services. Services include Apple Music, iCloud, Apple Care, Apple TV, Apple Arcade, Apple Card and Apple Pay. When checking the revenue breakdown by product, we see that iPhone is still their main revenue income stream and is generating roughly 60% of the total revenue. The revenue share of the iPhone has declined a little bit over time, but that doesn't mean that the iPhone sales in general have declined. It just means other segments are growing in higher amounts and get more revenue share in total of the total amount of revenue of Apple. More on the Apple sales in a minute. First, let's check the other segments. The second segment, the red one, is the iPad, which is also declining in revenue share. There was a big increase in iPad sales during the lockdown periods, but since then it has become a flat line in terms of growth. The first segment, the yellow one, is a Mac, including iMacs and MacBooks of course. Also not a lot of growth, but more on that in a minute. Now we only got two segments left, and in my opinion these are the most interesting segments right now for Apple. First we got the green one, which is the other hardware, including Watch, AirPod, HomePod and Beats. This segment has become a priority category for Apple as a way to add more revenue to a single iPhone purchase. The last segment is services, the orange one, which is growing in high amounts and has become the second biggest segment in terms of revenue. As mentioned earlier in this video, services includes Apple Music, iCloud, Apple Care, Apple TV, Apple Arcade, Apple Card and Apple Pay. This is another great way of generating more revenue. In here we see the revenue breakdown by region. Americas is the biggest region, representing roughly 45% of the total revenue, and approximately 40% of that revenue is coming from the US alone. Europe is the second largest region, and together with Japan, also the fastest growing region. When we go back to the iPhone sales, we see that between 2008 and 2015 the iPhone increased in sales. But from 2015 there was a decline because of competition. Since 2019 the iPhone sales are growing again, and in 2020 and 2021 the sales went up big time. Another thing to keep in mind is that people are using their iPhone for a longer period of time. They don't need to buy a new iPhone every year or 2 years, as they did back then, but people use their iPhone for around 4 years roughly. This is also the reason why Apple is focusing on more added sales and services. When we check the iPhone sales by region, we see that every region is growing except for China. In 2015 there were 71 million sales, but in 2020 there were only 35 million sales. In 2021 the sales went up again. All other regions are growing. When checking the iPad sales, we see that last year was a big increase of 57%, primarily due to the lockdown periods. In 2021 there was a decline versus 2020, and it's likely going to happen that the iPad sales will continue to a flat line growth. Since the introduction of the Apple Watch in 2015, it has made an impressive growth. Back in 2015 there were only 8.3 million sales, and in 2019 there were 46 million sales. Because of the limited data in this research, I can't show you the data of 2020 and 2021. The Airpods also made a big jump since their introduction, and in 2020 they almost increased 100% from 60 million all the way up to 140 million during the lockdown periods. In 2021, AirPods sales declined, but if you compare it to the previous years, I think it's in line with the expectations and it will continue to grow from here. The HomePod sales has been a limited success, but still made a big increase in terms of sales, from 4.2 million in 2018 to 14.8 million in 2021. Apple TV has added more active devices every year, especially in the US, but around 50 million units behind Roku. But at least it's still growing. The Mac sales are also going up. Not in big amount, but a thing to keep in mind is that in general the PC market saw a decline in the past decade, where Mac sales grew, so that's a positive thing. Now my favorite statistics, and also the one that's most impressive in my opinion. The total amount of subscribers to Apple services. In 2015 only 30 million. In 2021 745 million. Apple Pay active users grew from 337 million in 2017 to 507 million in 2020. The total transaction volume of Apple Pay grew from less than 1 billion in 2016 to 90 billion in 2021. And please notice the big jump between 2019 and 2020. It's expected that this is going to increase in the coming years as well. So, this was a lot of information and numbers about Apple, but I think it's really important to know what Apple does and how they are focusing on the service part next to the major revenue stream, the iPhone. Let's start analyzing this stock by checking the historical stock price performance and compare it to the S&P 500 and in this case also to Microsoft. On the 5-year chart we see that the S&P 500, the blue line in this graph, is up 81%, which is real nice to be honest. But Apple and Microsoft are up more than 300% and Apple is even up more than 350%. On the 1-year chart we see that the S&P 500 is up 3%. Microsoft is up 6.5% and Apple is up more than 22%. Again, Apple is the winner here. On the 6-month chart we see that the S&P 500 is down 6%. Microsoft is down 11%, but Apple is up almost 9%. Year to date, Apple is down 12%, but with the earnings ahead, this stock might go up again. So I'm really looking forward to the earnings and what will happen with the stock price, of course. And with that being said, it's time to check the fundamentals of Apple stock. As mentioned earlier in this video, Apple is the biggest company in terms of market cap, as everybody knows. Right now, they have a market cap around 2.6 trillion. The current PE ratio is sitting at 26, and so is the forward PE ratio. To be honest, I think based on the PE ratio, Apple is almost fairly valued. You have this huge company which is still growing and has enough cash to keep on improving the business. Normally, people say a stock is fairly valued around 20 and probably overvalued at a higher PE ratio. But I think it depends on different things, such as market leadership, growth rates, margins, free cash flow and all other things combined together. Personally, I will pay a small premium for Apple, I think. And a thing to keep in mind is that nowadays stocks are simply trading for a higher PE ratio as shown in this chart. That doesn't mean you should pay a premium for every stock or that 26 is justified for Apple or anything, but it just means that stocks in general are trading for higher prices and you need to decide whether this price is undervalued, fairly valued or maybe even overvalued. In my opinion, Apple is fairly valued around a PE ratio of 25 for me, but that can be different for you or somebody else. Let's continue analyzing the stock by checking the operating margin, which is sitting at 30%, and profit margin is sitting at 26.5%. Both great looking to me. And when we check the historical margin, we see that from 2016 to 2019, the margins were a bit decreasing. But ever since the end of 2019, the margins were increasing again. Also because of the new growing revenue streams such as service and other hardware. Return on assets is sitting at almost 20% and return on equity is sitting at 145%. Both are fine by me and it's highly likely these numbers won't go down very soon, so that's also comforting me a lot. The 12-month trailing revenue is sitting at 378 billion and is up 11% in the latest quarter year over year, which is also very nice. They are still growing. In this graph we see the revenue per quarter and year. It's going up nice and steady, and especially during the lockdown periods in 2020 and 2021 the revenue took a big jump. It's expected that the growth will slow down a little bit, but that won't stop Apple, especially with the big growth in other hardware and services. The EPS is also growing in high amounts, and this is because Apple is making more money and because of the share buybacks. But more on that in a minute. First, let's check the balance sheet. Right now, Apple has a total cash of almost 64 billion and an operating cash flow of 112 billion. Leverage-free cash flow is sitting at 80 billion. The total debt is sitting at 122 billion. So they are capable of paying down a big chunk of their total debt, which is a good thing in my opinion. For me, it's really important that a company has an increasing free cash flow, because free cash flow is used to pay down debt, buy back shares, do acquisitions, research and development, and of course pay dividends. In this graph we see that free cash flow is growing in high amounts, so that comforts me a lot again. Another great thing is that Apple is buying back a lot of shares. In the past 5 years they bought back roughly 21% of the total shares outstanding, so that's a huge number. And one of the better things about Apple in my opinion. With buying back shares the EPS will go up, which attracts other investors and makes your share become more valuable. Next to that, the total dividends paid will go down as well, which is another great thing, because this makes it more easier for Apple to continue to pay dividends and of course increase them in the future. In this chart we see that the total dividends paid is going up just a little bit, and that's because they increased the dividends, not because of issuing more shares. Since we're talking about dividends anyway, Apple pays an adorable dividend of 0.5% dividend yield at an annual payout of $0.88, which isn't a lot to be honest. Payout ratio is sitting at only 14%, meaning there's 86% in cash left for buyback shares, pay down debt, acquisitions and all other things. To be honest, I don't like the dividends this low. Even it does cost Apple a lot of money to pay dividends in the total amount of dollars. The payout ratio is just sitting at 40%, so for me it would be better if it's going to 1% dividend yield. But that can be different for you or other investors of course. The 5-year growth rate of the dividend is sitting at 9%, which is also a bit low in my opinion. I would prefer at least 20% here to be honest, especially because Apple has more than enough cash to support it. The dividend growth streak is sitting at 9 years, which is fine by me. This will take time obviously. The last thing I want to discuss are the fundamentals of Apple versus Microsoft. Both are above the 2 trillion market cap as we see here. But Apple has a lower PE ratio compared to Microsoft and a lower forward PE ratio. The price to free cash flow is real similar to each other, and I don't think there's a big winner here. When we check the profitability, we see that Microsoft has a higher margin than Apple. But on the other hand, Apple has a higher return on equity, a higher return on assets, and a higher return on total capital. So again, for me there's no big winner here. When we check the revenue growth, we see that year over year Apple is the winner versus Microsoft. But the 5-year compound annual growth rate is higher at Microsoft. The net income compound annual growth rate is also higher at Microsoft. Here we see the balance sheet of both companies. Both companies have more than enough cash to invest in the business, but it has to be said that Microsoft has enough cash to pay down all their debt, which is not the case in Apple. But I don't think that's a problem for Apple. Both companies have a dividend yield below 1%, but Microsoft is the winner here for me. The dividend growth rate is also a little bit higher, and so is the payout ratio at Microsoft. My final conclusion is that Apple is a great company and also a great stock to own. It's one of the stocks that I own for a long period of time, and I'm not planning to sell it very soon. But I do think it's a good thing to evaluate this company every now and then, because whenever the growth is going to disappear, you might have a problem. For now, that's not the case, so nothing to worry about. I do think there are some things I don't like at Apple. The dividend is one of those things. I would like to see a growth at higher levels. For now, I think Apple is a hold, and whenever the PE ratio is going down below 25, this company could be a buy. So it's almost there. But Remember to always do your own research and never fully trust what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.